Hello and welcome back to Explain the Charts. Today is July 2nd, 2025, and we're diving deep into the SPY, the S&P 500 ETF, looking at recent news and, of course, the charts to make sense of market movements. First, let's address some key headlines. CNN reported 3 wild months on Wall Street, with stocks hitting record highs, but the dollar stumbling to historic lows. CNBC mentioned the Dow jumping 400 points, though the S&P 500 closed flat, suggesting a rotation out of tech. Barron's noted the Dow was set to open higher after the Senate passed a spending bill. Finally, Reuters reported the Nasdaq and S&P 500 closed lower, weighed down by tech stocks. These events, especially the tech sector weakness, could create short-term bearish pressure. We need to see if this pressure is supported in the chart. Now, let's shift our focus to the charts, starting with the one-day time frame. Looking at the recent candles, we see a bit of choppiness, suggesting some uncertainty in the market. We need to identify support and resistance levels. Zooming into a more recent range of candles on the daily chart, between approximately mid-May and today, July 2nd, we see the SPY generally trending upward, but it's not a straight shot. There are pullbacks mixed in with the upward movement that must be assessed. We can look at the overall trend, and we can see the prices slowly inching upward, reaching higher and higher, despite pullbacks. The key here is that the peaks have been reaching higher, and the bottoms have also been reaching higher, which means overall, we're in an uptrend. To get a clearer picture of shorter-term dynamics, let's switch to the 1-hour chart. Looking at the 1-hour chart, we can see more detail. It's clear that over the past few weeks, SPY's price movement, at least over the past few weeks, has been slow and steady. Let's dive deeper into the short-term price action by examining the 15-minute chart. Here, we can identify potential support and resistance levels more precisely. Note recent volatility in the 15-minute chart. There appears to be some churn near the most recent 15-minute intervals, which could represent some volatility that has yet to resolve itself. So, what's the outlook? In the short term, the mixed news and recent chop suggests caution. A break below support at around 610 to 615 could signal further downside, potentially driven by tech stock weakness. Conversely, a sustained move above resistance at 620 could indicate renewed bullish momentum. For the longer term, keep an eye on economic data and earnings reports. If economic data continues to be strong and earnings remain positive, the bullish trend could continue. However, any signs of economic slowdown or negative earnings surprises could trigger a significant correction. If positive economic data is released and earnings remain positive, there's a 60% chance we'll see SPY test 630 by the end of August. Conversely, if economic data is weak, there's a 40% chance we could see a dip to 590.